Alright, ICT traders, just a very quick one right here. I took a trade this morning that gave me about 29 to 30 pips using one of my favorite ICT strategies that I've taught you time and again. But it seems like quite a number of you people in the Telegram community are yet to understand how this simple ICT trading strategy works. So let's do a very quick recap on this particular strategy. I'll break it down to you in detail right here. So why did I take the trade and what did I see? What was my reason for taking the trade? So let's get into it in detail. I normally trade within the ICT London Open Killzone. And then what I do is that I use this concept of Asian range sweep of liquidity, coupling it with a understanding of how directional bias is, and then I take trade in the direction of the bias. Let me show you how that works. So what exactly is the ICT London Open Killzone? So the ICT London Open Killzone is within the time of 7 a.m. Please make sure you write this: 7 a.m. to 10 a.m. London time. 7 a.m. to 10 a.m. London time. If you're using New York time, that's about 2 a.m. to 5 a.m. New York time. So you can put this in your journal. Please make sure you write that. Secondly, you also need to understand where the Asian high and low is, because that is where the Asian range is. The Asian high and low is. I will simplify that to you in a short while. I will show you an indicator that does that automatically. How to get it. Basically, it's such an easy way. What happens during the ICT London Open Killzone is that price creates either the high of the day or the low of the day. If you see a candlestick like this, Prince, let me show you. If you see a particular candlestick like this printing, let's say this is a bearish candle, just like the one we have right here, a bearish movement. If you see a bearish candle like this, a bearish candle is red in color, right? So let me just give it red. This is a bearish candle, and you have this. Let's have let's call it, this is the open, the close of that particular candle. Let me have it properly. So price open here and it created the high right there above here, and it pushed down, it closed here after making the low here. This is the low, this is the high, this is the open, this is the close. So the London Open Killzone has the potential of creating the high of the day or the low of the day. If price is bullish, it will create the low of the day, but if price is bearish, it will create the high of the day. All right, that is basically what the London Open Killzone gives you. So after that, the first thing you do is to understand your daily bias. And you can do that either in the 4-hour time frame or in the daily time frame, as easy as that. So normally this is a bearish market. You don't need to stress yourself about that. And the 4-hour is also showing you that it is bearish. And then look at this. Yesterday was Monday. I didn't take a trade because I saw this very big gap. This is what ICT call end work, new week open gap. This seldom happens on currencies, but whenever it happens, price will have to close this gap. And immediately after creating this gap, price actually shifted structure here. So ideally, we expect to see this gap close. So that was the reason why I didn't take trade yesterday, because I woke up from my sleep and I discovered that price was already here, right above here. Right above there. So I was thinking, okay, price is closing this liquidity void. Please, you have to understand how ICT works. You have to be very flexible and understand how this concept works in general. Price is about to close this gap. So if price is about to close this liquidity void, it means after closing, we will focus on closing this gap too. Yes, we will focus on closing this gap too. So I didn't give any signal. I didn't take trade yesterday. I just forgot about it. I wanted to see a shift in structure in the direction of this movement, since the overall movement is bearish, and I shifted structure here trying to close up this area, reaching out for premium area, which is above the 50% level of your Fibonacci tool. You have to do everything in detail. So this morning, after price reached here, I woke up in the morning just at the exact time for my trading activities. This is it. Now, this is what you have in the morning. I normally put in my ICT Asian range indicator. This is called Asian range Killzones. This one, you can find it on tradingview.com. Just simply come to tradingview.com. You can choose your local time right here, either UTC +1, or you can change it to the New York local time, which is UTC -4. You can see it, New York. So you can decide to leave it as UTC +1, the London time, and you can decide to leave it as that. So this indicator called Asian range and Killzones, this guy. This is what you need basically. So how does this strategy works? This was what happened yesterday, but it was in the evening. In my time, it was in the evening. I wouldn't want to do any trade here, even though there is a shift in structure here. I was waiting for the following day to come in. Look at this. Price did something here right at that point. There is a mitigation block right here above here. This is the reason why I was so confident with this trade, coupling it with my ICT London open Killzone and then the Judas swing I saw here. So after seeing this, I knew price have filled up the liquidity void in that other side. On my left side, what next do I need? I need just some kind of a indication that price is about to crash down to come and fill up the gap down here. And then this is my ICT Asian range, this guy. You can see the indicator. I've actually delineated that for you in detail. Let me just take out display London open, take out this one. I will leave just the Asian range on the indicator. So this is the only thing I need. And this is it, guys. 7 a.m. was here, right there. And after 7 a.m., I saw this sudden push above and sweeping the upside liquidity. That is the buy side liquidity. I saw price pushed up to sweep the buy side liquidity. Let's say it swept all the stop losses here for those people taking a sell order and then matching up with a buy order. So price grabbed the liquidity here, matching it up with this mitigation block, bearish mitigation block, and I was, wow, this is exactly what I needed. You're now seeing everything, right, in detail. So this push above is what ICT call Judas swing. You sweep above Asian high, making people thinking into saying that price just retraced and now we're about to go bullish. Other people are planning to go bullish from here. But with this understanding, you know that the London Killzone always gives you that. And then price actually created the high of the day. Here, this was the high of the day. How do I know that this is the high of the day? I will only know that in the lower time frame. If I see a shift in market structure in the lower time frame, like 5 minute, because I'm jumping from the 15-minute now to the 5-minute. The 5-minute time frame will tell me if price is shifting structure or if this is really the high of the day. If this is not the high of the day, I will not see this shift in market structure. Now, this is not a very perfect strategy. It happens at least 70% of the time. It is correct at least 70% of the time. So this is the shift in market structure right here. Market structure shift is simply when price shifts direction from an uptrend to a downtrend or from a downtrend to an uptrend. Other people call it change of character. ICT calls it market structure shift. All right. So this is it. There is a market structure shift right there. And what do I need, guys? After that, nothing else. I will simply wait for price to come back to where? To premium, to premium, to premium. And then I will look forward in premium an institutional reference point, which is this particular fair value gap. If it is about the lower time frame entry, I mostly use the fair value gap most of the time, but not always. Most of the time, it is the fair value gap that I use. So I decided to enter this trade for the sell here. I didn't update you guys in the community because I know this is something I've taught you time and again. There is no need to be pampering everybody. So you do this so that you will learn. I wanted you guys to learn it, to take it by yourself, to spot the opportunity so that you become profitable in the market. So that was about, was it 30 pips? Let's see. Yes, just 30 pips. This was too much. Just about 30 pips. Somewhere around here was my target. That was where I closed the trade. Somewhere around there. Right here, 30 pips before the gap, because I knew that price would react from the gap, so I needed to take action, and I was putting my stop loss just above that. Now, after that, I did a little recap on the trade, and I hope you know you can even reduce your risks. My risks here was, let's see, was about 12 pips. You can reduce your risks by going down to the 1 minute time frame and watch out for this particular retracement. Let me show you this. This is the wonder of using this simple concept. Let me take out these guys and then I'm going to show you how that works. So look at this retracement. Can you see this retracement? I hope you know you can also do the same principle. Watch out for this retracement. This retracement is now an uptrend. You will wait for price to shift structure in this retracement as it moves in the lower time frame. Anytime this one shifts structure, you look for a fair value gap and then you will take it. And your stop loss is going to be very small this time around, just above here. Let me show you that. Let me show you that so you can see it. Deleting just those ones. So if I will go down to the 1 minute time frame, this time around, look at this. Can you see? Price is moving higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, knowing fully well that price is reaching out for that 5 minute fair value gap. I deleted it, but you're supposed to see it. It's somewhere around here. The 5 minute fair value gap. The wonder of ICT is so much. Shout out to Michael Jahodison, the founder of ICT. He has just opened a new realm to so many forex traders, and what I'm doing here is simply giving you a detailed breakdown of those things I've learned from ICT. All right, added with some knowledge I have, and of course that's the beauty of being a student. You add up to what you've learned. It's a very good way of learning, all right, so that you get a practical understanding of it. So look at this. Price was coming up, coming down, coming up. You can reduce your risks. I actually took the trade in the 5 minute time frame because I was in haste to take the trade. I could have waited for this. So shift in market structure, shifted structure right there. This is a smaller time frame, so I will consider this as a retracement. Since it is a very small time frame, I wouldn't mind considering this. So you can see this candle actually closed outside this low with just a little body movement there. So where is your entry supposed to be? Where is your entry supposed to be? Right here. Let me show you. After closing that, you're going to see price. So price have created a, let me take it back again. Price have created a fair value gap right here. Let me show you that fair value gap right here that price have created. And where is your entry? Your entry is just right at the tip of the fair value gap, and your stop loss is here. My stop loss used to be 12 pips, but if I were to enter from here I will have a better risk to reward. My target was about 30 pips. Let's measure it from here to here. 30 pips is somewhere around here. That is 30 pips for you. In the 1 minute time frame is somehow different. That's 30 pips. And look at the risk now. The risk this time around is smaller than the one I took in 5 minutes. But I didn't take it in the 1 minute. It's just about 6 pips risk. And it's a very perfect trade, guys, to take. Look at this. You are still in the trade. A very perfect one. And the trade actually worked in our favor. So shout out to those ones that actually took advantage of this trade. And if it is this kind of trades, I wouldn't disturb myself. I know you guys can do it. You can do it time and again. I'm so proud of what you guys are doing in the Telegram community. So this was basically how this concept works. Every time you wake up, you wait for, if price is bullish, you wait for price to sweep a sell side liquidity. If we were going bullish, we were expecting to see price has been swept in the ICT London Open Killzone, that window. Don't forget that window, 7 a.m. to 10 a.m. that window. After that, you wait for a shift in structure. A shift in structure. That's if we're going bullish, we're supposed to see price take out liquidity, and then we see a shift in structure coming back, and then we go bullish. That's basically how this strategy works, guys. And I hope this is explanatory enough. Let me end this video right here. Don't forget to subscribe to this YouTube channel. If you have any question, let me know in the comment. Thank you guys for watching. See you next time.